In this Q1 property market update, we dive into why a quiet market is the best time to make a bold move.
We're back in your life, and today we're giving you your quarterly property update and why we keep buying properties, Michael.
Yeah, I mean, last year was a whole lot of survive to 25. We're in 25. We survived. What the hell are we going to do next?
I know. I thought 2025 would be better.
Yeah, I mean, it's still early days and no one could really see kind of the political missiles that have been lobbed around and the literal missiles that have been lobbed around at the start of this year. It's caused a lot of uncertainty, a massive slowdown in the market. And usually during these times, everyone wants a bit of stability, right? You just sit down, you hold on, you do nothing. However, uncertainty creates volatility and always a little bit of opportunity.
Definitely. Now, before we jump into breaking down this episode, we must acknowledge, Michael, we're in our brand new podcast studio.
And isn't it a banger?
So we're still working on fitting out our new podcast room, but it's very cool, Mike. We went from doing a podcast episode in our boardroom, which absolutely sucked.
Yeah, it was terrible.
To 400 odd episodes later, we've got a brand new podcast room in our brand new office at Lighthouse. So if you ever want to come say hi at level 10 at 23 Custom Street, pop by. But let's get back, Mike, to... I want to start with 2025. We were saying all we had to do was survive.
Yeah.
Why did we feel optimistic last year that 2025 was going to be better?
Yeah, cool. So the reasons we have for optimisms: 1, official cash rate coming down. 2, us coming out of a recession. 3, everyone got so bored of doing nothing. We were finally going to start doing things again. All of those have happened. It's just there's been some really interesting overlays in the environment, politically, economically, which have kind of caused still a bit more uncertainties. Everyone's just holding back a little bit. Yeah, interest rates are coming down, but there's things happening which mean we're not seeing that snapback that we thought we were going to get.
Yeah, market sentiment hasn't moved like we thought it would move. And one of the reasons I thought the property market was going to move, in hindsight, is probably one of the reasons it's not moving. And if you think about it, from like 2022 to 2025, people have been waiting, right?
Yeah.
And they go, I'm not going to sell my house, or I'm not going to downsize it. I'm not going to upgrade because of the value of my home. And I thought, well, there's going to be all of this activity out in the market. And there is activity, Mike. It's just a hell of a lot of people are trying to sell their house and nobody's walking around with any bloody checkbooks.
Yeah, and there's a couple of reasons if we go under the surface of that a little bit. 1, obviously people waiting to sell. People going, cool. If we hang on till 2025, things will be better, be a much better environment. We're all going to list summer 2025. Just after Waitangi Day, a flood of houses hit the market. Number 2, bright line, right? Like a lot of bright line kind of tests were expiring around then. People were holding off. The bright line got reduced back to 2 years. So it meant that people could sell without incurring that capital gains tax on the end of it, right? We've got the buyers. There are a lot of first home buyers out there at the moment. It's just that there's a lot of stock to work through. So the transaction volume is coming up, but the listing numbers have come up so high that there's just so much stuff to work through. We're not seeing that corresponding price increase.
Yeah, and we're going to talk a little bit about Mike and I buying properties, but I have also sold a property, which we do have some episodes coming out on that. So make sure to subscribe to the channel and follow us. But in summary, I started a property in January at 1.3 million, ended up taking an offer for 1.055. Now, if that's not the market going, here's a nice punch in the face for you, I don't know what is, Mike.
I think the statistics back that up. Year on year, about a 12% increase in the number of sales, but that time it's taking to sell a house has increased quite significantly. So again, the transactions are there. It's just still a buyer's market. And we're hearing this anecdotally from sellers where, you know, people will come in and they're 99% happy with their house, but they're like, oh, it's not quite north facing enough. So I'm not going to make an offer on it, right? And they know they can go down the road and for the same money, get exactly what they want, right? Because they can still get bargains.
So Michael, I mean, we've just given all the reasons why the market hasn't moved the way it has moved, but there are so many reasons why we're still feeling very optimistic about the market for first home buyers, for next home buyers, for investment property owners or potential owners. You're going to want to hear this right after the break.
Buying in a slow market might be your smartest move. And if you're thinking of buying, get in touch with Lighthouse Mortgages. We can help you with the strategy, the numbers, the pre-approval, right through to the purchase. So click the link below to get in touch. Now, back to the show.
So, Mike, we're giving all these reasons why the market hasn't moved the way that we wanted. A lot to do with supply, people probably still being a bit hesitant. But fundamentally, interest rates have just come down a astronomical amount from like at its peak 7.99% down to 4.99%. And we still feel that interest rates have got a long way to move. So the value of the house hasn't increased and the cost of the money has become cheaper.
Yeah, and the other thing that happens is as interest rates decrease, your test rates come down. So your servicing goes up. You can afford a little bit more. Now, obviously, I'm not saying you got to run out and max out your pre-approval, but it is nice to know that in a buyer's market, you've got a bit of room to move with that affordability. Interest rates coming down is a good thing for the economy. It means, unfortunately, that the economy is in a bit of a bad state, but it is a good thing looking forward for the economy, right? How far do they have left to fall? I think we might see at max, a 1 year rate at 4%. We're probably more likely to see it around 4.2, 4.5%. And that's where I would start maybe looking a little bit longer. But what does that mean for the economy, right? That means more cash in your hand after your mortgage payment to go out and spend. And that's where confidence in the economy comes from.
Yeah. And I mean, we talk to a lot of people. The economy is far from, heading in a very positive direction. I think rates need to be cut quite a bit more to try and build some momentum.
100%. So why do we think now is a great time to buy? Well, markets are forward looking and the property market is no difference, right? Yep, might be a little miserable now, but so long as you can reasonably afford that mortgage, I am pleading with customers to go out and pull the trigger. And it's one of those things where people will turn around and go, man, you were lucky when you bought in 2025. You weren't lucky. All of the signs were telling you not to do it, right? Tariffs been flying around, a war kicking off every 30 seconds, and James's hair's not growing back.
I'll stop you right there, Mike. We both know that's not true.
He's looking slick.
Yeah.
So again, markets are forward looking and we're forward looking. So both James and I, we've done a series on how we bought some multis and, went into the property game pretty hard. We're looking out at the moment going, where are the bargains? And, major city centers, there's still a bit more competition for what we're looking at. So we're looking out in the regions, right?
Yeah, and the regions are pumping at the moment. So they've got a bit more momentum than other parts of the market. So some key numbers for you. Tasman, Canterbury, and Otago saw their highest March sales counts in years, a sign that smart buyers are already moving. Marlborough and Canterbury had their highest sales since 2020 and 2021. Yeah. Interest rates are trending downward, which is building confidence slowly, meaning that those cash flows are starting to add up for investors. Again, the key word is slowly. But for me, Mike, this is going to be very obvious in hindsight. And if you're going, should I buy now or in 6 months' time? I don't know. Like you're playing the wrong game. You're trying to gamble. But if you're going, well, is the cost for money lower? Have house prices dropped, in some areas 20% and aren't moving upwards? Am I a long-term buyer? I think there's a lot of attractive features.
Yeah, and this isn't just the property market. If you're sitting at home going, man, these guys just keep banging on about the property market, the principle we're describing here is the same for every asset class. And everyone loves clicking on the Warren Buffett inspirational quote on Instagram, how you buy low and sell high and good companies. Look, this is exactly what we're talking about. So if it sounds like a sales pitch, I can assure you it's not. It is just the fundamentals of investing.
But if you want to click on the link below to find Mike and I's new residential fund with huge upside and no downside, just use the discount code MAGICMIKE10.
But again, it is one of those things where in theory, it is easy to say buy low, sell high. Practically though, what does that actually mean? It's quite difficult to do because when markets are low, there is uncertainty. Everyone's telling you to hand back. Your graph's probably telling you, oh, wait a little bit. This candlestick will do this. That is not what you do. You pick a good time in the market when everything's on sale. You go all in.
Yeah, and I mean, Trump and his tariffs with the share markets are a perfect example. Everybody absolutely flipped out, and now the markets are positive again, like year to date. So
I know. I find that bizarre. And we're sitting there like, this will all blow over in 4 weeks. And I reckon I'm about bang on with that.
Yeah. You did ask me if you should buy some shares.
I did.
Sorry about that. And to all our customers who set up investment portfolios after the last month, you're welcome.
Yeah.
So Mike, we've talked about the fundamentals of why we think it's a good time to invest. We touched a little bit on what we're thinking and why we continue to buy. I think it's good to break that down in a little bit more detail. When we're looking, so we did talk quite a bit around the first set of multis that we bought. We bought another 12 units recently as well, down in Wellington again. When we think about our own strategy, what are the main things we're focusing on?
Yeah, so it's buying smart, right? So again, seeing if we can buy something undervalued, seeing if we can spend a little bit of cash on it, bring that value up, recycle the cash out again. We're not trying to reinvent the wheel, right? We thought the first one went pretty well, so we're going to try and repeat it, right? And we may not get the same results. It doesn't really matter, like fundamentally, if we can buy land that pays for itself, I think that is always going to be a good purchase.
I did have a few people say to me, you'll never get a deal like that again. You got really lucky. Well,
yeah. I think the other thing as well is it's important to talk about this stuff because if we didn't believe it for ourselves, we don't believe it for our customers. And it's important to be like, no, we're not just preaching this. We actually go out and practice what we preach as well. And fundamentally, buying long-term assets is one of the keys to wealth creation. And that's what we're doing.
Absolutely. There's execution risk with everything, but if you've got a good team around you, if you've got a good plan, if you're making sure you're not overcapitalizing, it ticks all the right boxes and you just hold. And it really just doesn't matter if the market moves tomorrow or in a year's time. We're holding these assets for the longer term. I think one thing we probably like a risk for some people, which maybe Michael, you got caught up a little bit in, is trying to get too good of a bargain opposed to just focusing on getting the discount in the market.
I guess that's the thing, right? Is the market's on sale, that's the bargain. You don't have to drill someone down. And if it's not, another 10% off the asking price, then you're not getting a good deal. The market price at the moment is a bargain. That's what you are shopping.
Yeah. And the fundamentals of financial planning, right, is you spend less than what you earn, you buy a property, you pay down the debt, you buy some investment property, then you invest into shares. If you're at a stage where you can either buy your first home or look at an investment property and you're doing it for the long term, there's so many good fundamentals. You got to make sure, obviously, that you can, depending on the property that you buy, that you can deal with the top-ups as part of a long-term plan, that you're stress testing yourself, as we've recently learned. You're not going to have all the information, and the saying, Mike, is if you've got all of the information, make a perfect decision, the opportunity's past you.
100%.
Okay, let's wrap it up right there. Much love to Lighthouse Financial for sponsoring this episode and providing us with this beautiful studio. Please make sure to subscribe to the channel. Give us a like, a follow on Spotify, and we'll catch you next time.
Cheers.